Welcome to this video on SmartWorks Accounting Explained. The SmartWorks suite of modules and all accompanying documentation is owned by Kearney SmartWorks. All rights are reserved. This training is confidential and provided under the conditions outlined in the non-disclosure agreement. The topics covered are Accounting 101 or Accounting for Dummies Like Me, Journals on Transactions for Consumers, and Journals on Transactions for Agents. Moving to Part 1, Accounting 101. For those of us who are not familiar with accounting, we do not always realize that an account has two related parties, the giver and the receiver. When customers make deposits into their bank accounts, they normally only view this from their own perspective. They see their account balance increase, however the receiving party, the bank, now owes its customers the deposits paid. When customers make withdrawals, the bank has to pay the withdrawal amounts back to the customer. Dual entry accounting. The double entry system of accounting or bookkeeping means that every business transaction will involve two accounts. So for example, when a company borrows money from its bank, the company's cash account will increase, but its liability account, the loans payable, will increase too. Double entry accounting is based on the fact that every financial transaction has equal and opposite effects in at least two different accounts. Account types. SmartWorks is a solution that operates for the benefit of a utility, and so of course all the accounts represented are for the utility's financial interactions with other parties. Not all financial interactions are the same, and so to represent this better, some would say worse in fact, accounts are classified into different account types. The account type in that account changes how transactions in that account are interpreted. It is very important to remember that the account type assigned to an account is always in respect of the utility, in order to reflect what it owns and what it owes. In SmartWorks, the following three account types are used: asset, revenue, and liability account types. To be or not to be. When is a transaction positive or negative? Now this is a very important slide. Whether a transaction is positive or negative for a given account is related to the account type and the perspective of the party looking at the account. So it's very important to realize that in SmartWorks, to enable easy understanding for consumers and agents, and facilitate easy reporting, all consumer and agent-related accounts are deemed to be from the perspective of the consumer or agent respectively. This approach is not necessarily the one that is taken in formal accounting systems, but it does mean that the sign of the transaction in a given consumer or agent account is always such that it will make sense to that consumer or agent. So payments are positive and increase the account balance, and deductions are negative and decrease the balance owing to the utility. SmartWorks contains quite a few accounts. There are accounts for consumer transactions, including services and auxiliaries. There's accounts for the utility, to track services sold, payments collected, auxiliaries owed, and commission paid. And then there's accounts for agents or vendor transactions. So let's now look at account types pertaining to consumers. Each consumer has an umbrella or consumer account to which the consumer's service accounts and auxiliary accounts are associated. As I've mentioned, for ease of understanding, all positive transactions for all such accounts increase the account balance and decrease the amount owing by the consumer to the utility. So plus amount equals less owed by the consumer. Account types pertaining to the utility. The utility's bank account records payments received and it's of type asset. Payments are positive transactions which increase the asset balance for the utility. The utility's services rendered account records the value of services rendered and is of type revenue. Positive transactions reflect increased consumption by consumers and therefore increase the revenue or balance. The utility's auxiliary revenue account records the value of all auxiliaries owed and is of type revenue. Positive transactions decrease the balance and revenue owed to the utility. The utility's commission remuneration account records the value of commission paid to agents, that's vendors, and it's also of type revenue. Transactions are recorded as negative because the settlement of commission decreases the revenue available for the utility. There are also account types pertaining to agents or vendors. Agents collect revenue on behalf of the utility. Each agent has one agent account, that's their umbrella account, and one agent revenue collection account, and they're both of type liability. In a similar manner to consumers, all positive transactions for all agent-related accounts increase their balance and decrease the amount owing by the agent to the utility. So once again, plus amount equals less owed by the agent to the utility. Journal types. SmartWorks uses journal entries to link the two transactions. Journal entries are formal accounting entries used to identify a business transaction at a given date and time. So the dual entry transactions, the postings, are recorded with each journal, one in the given account. A journal is given a unique reference number. There are a number of different journal types, each of them used to identify a particular activity or use case that created it, and typically the parties involved. We'll be covering each one of these in due course. Similarly, there are different transaction types as shown. Again, we'll look at these when we discuss each use case. Now that we've completed our accounting crash course, we'll look at part 2, transactions and journals that relate to consumer accounts. Services rendered journal. A services rendered journal is used to deduct the cost of readings or prepaid tokens as determined by the Service Manager tariff application. Services rendered transactions are written to the consumer's service account, which is of type liability, and the utility's services rendered account, which is of type revenue. Negative service rendered transactions are posted for the service account, that's for consumption charges, and positive transactions posted to the services rendered account, that's for revenue. Services rendered journals are used in the generation of invoices. Occasionally, things can go wrong, so a services rendered adjustment journal is used to correct for over or undercharging for actual readings or cancelled tokens. Services rendered transactions are written to the consumer's service account and the utility's services rendered account. Now, if the consumer has been undercharged, negative service rendered adjustment transactions are posted to the service account and positive transactions posted to the services rendered account. On the other hand, if the consumer has been overcharged, positive service rendered adjustment transactions are posted to the service account and negative transactions to the services rendered account. Service rendered adjustment journals are also used in the generation of invoices. Payment journal. Payment journals are used to record the receipt of payments. Payments are the financial result of processed payment messages received via the Payment Gateway module. Payment transactions are written to the consumer's consumer account, which is of type liability, and the utility's bank account, which is of type asset. Positive payment transactions are posted for both the consumer account, because it increases the consumer's funds available, and the bank account, because it's an asset type. Payment journals are not used in the generation of invoices, but they are of course shown on statements. SmartWorks utilizes a very important option for service accounts. The Service Account Manager is able to configure for each service account whether direct payments are enabled for a service account. So if enabled, this is achieved by using the service account reference number as a beneficiary reference. It's useful where a consumer wishes to make a payment for a specific service, such as for a prepayment token, for example, and not just into their umbrella consumer account. Another option provided by the Service Account Manager is able to configure, again for each service account, whether transfers are distributed to that service account. That is, when a payment is made into the umbrella consumer account, it is transferred into the relative service accounts. Now, if transfers are enabled for a service account, the payment made into the consumer account will be apportioned into that account, the latest first. That's useful for post-payment services. If transfers are disabled, no such apportionment will occur. This is useful for standalone services like those with prepayment meters. Which leads us on to the transfer journal. A transfer journal is used to distribute a payment made into a consumer account across participating service accounts. As I've said, see the previous slide. Transfer transactions are written to the consumer's consumer account, which is of type liability, and the consumer's service account, also of type liability. Negative transfer transactions are posted for the consumer account to decrease its balance, and positive transactions posted to the service account to increase its balance, hence the transfer. Transfers are not shown on invoices or statements. Transfers are also used for agent accounts. Bank adjustments for consumers. Bank adjustment journals are used to correct for erroneous payment collections from consumers. To credit or refund the consumer, enter a positive amount. A positive bank adjustment transaction is posted to both the consumer's consumer account, again type liability, and the utility's bank account of type asset. To debit or charge the consumer, enter a negative amount. A negative bank adjustment transaction is posted to both the consumer's consumer account and the utility's bank account. Bank adjustment allocations are not shown on invoices or statements. The following will then take place. The adjustment that was paid into the consumer account is transferred to the corresponding consumer service accounts via a bank adjustment allocation journal. Bank adjustment allocation transactions are written to the consumer's consumer account and the consumer's service account. So if the consumer account was credited in the previous step, a negative transaction is posted to the consumer account and a positive transaction posted to the service account. If, on the other hand, the consumer account was debited in the previous step, a positive transaction is posted to the consumer account and a negative transaction posted to the service account. Auxiliary accounts are used to keep track of additional charges related to services but not actually services themselves. It might be the cost of a meter installation or a fine or even rates. Auxiliary adjustment journals are used to effect changes to an auxiliary account. A consumer can have multiple auxiliary accounts. So those adjustments could be setting the opening balance, corrections, and even settlement of that account. Auxiliary adjustment transactions are written to the consumer's auxiliary account, which is of type liability, and the utility's auxiliary revenue account, which is of type revenue. So to increase the amount owing by the consumer, enter a negative amount. A negative auxiliary adjustment transaction is posted to the consumer's auxiliary account and a positive transaction posted to the utility's auxiliary revenue account. In other words, the utility is owed more. To decrease the amount owing by the consumer, enter a positive amount. A positive auxiliary adjustment transaction is posted to the consumer's auxiliary account and a negative transaction to the utility's auxiliary revenue account, so the utility is owed less. When an auxiliary adjustment is made for security purposes, an alert of alert type auxiliary adjustment made is created. Auxiliaries get collected when readings are rated or tokens generated through an auxiliary collection journal. SmartWorks allows auxiliary charges to be levied when rating a service. An auxiliary collection journal is recorded for each auxiliary deduction. The auxiliary collection transactions are written to the service account and to the auxiliary account, also of type liability. Negative service rendered transactions are posted for the consumer's service account and positive transactions for the auxiliary account because the consumer now owes less auxiliaries. Auxiliary collection adjustment journals are used in the generation of invoices. Mistakes can happen, and a consumer may be charged too much or too little auxiliaries. An auxiliary collection adjustment journal is used to correct for over or undercharging of auxiliary collections. Auxiliary collection adjustment transactions are written to the consumer's service account and the consumer's auxiliary account, which is of type liability. So for an under-collection, negative auxiliary collection adjustment transactions are posted to the service account, and positive transactions posted to the auxiliary account because the consumer now owes less auxiliaries in the future. In the case of over-collection, positive auxiliary collection adjustment transactions are posted to the service account and negative transactions posted to the auxiliary account because the consumer now owes more auxiliaries in the future. Auxiliary collection adjustment journals are used in the generation of invoices. In part 3, we're now going to look at the transactions and journals that are related to agent accounts. The operational use cases for agents results in the following journal types and transaction types as shown. Agent revenue collection. Remember that agents collect revenue from consumers, and remember also that agents pay up front for the ability to collect that revenue, and so the utility has already received this money. The funds must therefore be transferred from the agent to the consumer in exchange for the informal payment made between the two parties. A transfer journal is therefore created which transfers credit from the agent's agent revenue collection account to the consumer's chosen service account. Transfer transactions are written to the agent's agent revenue collection account, which is of type liability, and the consumer service account, which we know is of type liability. A negative transfer transaction is posted to the agent revenue collection account, and in so doing decreasing the agent's balance, and a positive transaction is posted to the consumer's service account, so doing increasing at least temporarily the consumer's balance. Transfers are shown on agent statements in order to reflect the revenue that they've collected. The transfer from the agent to the consumer's service account increases the balance of that account temporarily. In the case of the generation of prepayment tokens, the positive balance in the consumer service account immediately triggers the generation of a token for the balance amount, if it's bigger than the minimum token value, which then returns the consumer service rendered account balance to 0. If, on the other hand, the service represents a post-payment service, the cost of readings will be deducted from the consumer's service account in the normal fashion. Agent commission. Agents collect revenue from consumers on behalf of the utility in return for commission. An agent's commission, if any, is recorded by means of a commission remuneration journal. A commission remuneration transaction is written to the utility's commission remuneration account, also of type liability, and the agent's agent revenue collection account, also liability. Negative commission remuneration transactions are posted for the commission remuneration account because the utility has settled the commission, and positive transactions posted to the agent revenue collection account because the agent's balance is credited with the commission. Commission journals are reflected on the agent statement. Upfront payments by agents. Like consumers, agents make upfront payments via the payment gateway. The upfront amount allows the agent to collect revenue from consumers to the value of that amount. Payment journals are used to record the receipt of payments from agents, just like with consumers. A payment transaction is written to the agent's agent account, which is liability type, and the utility's bank account, of type asset. A positive payment transaction is posted for both the agent account and the bank account. Payment journals are shown in agent statements. The agent account is also an umbrella account, so a transfer journal is then immediately used to distribute the payment from the agent account to the agent revenue collection account. Unlike service accounts for consumers, agents can currently only have one agent revenue collection account. A transfer transaction is written to the agent's agent account and the agent's agent revenue collection account. A negative transfer transaction is posted for the agent account, reducing the available balance, and a positive transaction posted to the agent revenue collection account, increasing the available balance and allowing a subsequent revenue collection by the agent. Transfers are not shown on invoices or statements. Bank adjustments for agents. As with consumers, bank adjustment journals are used to correct for erroneous payment collections from agents. To credit or refund the agent, enter a positive amount. A positive bank adjustment transaction is then posted to both the agent's agent account and the utility's bank account. To debit or charge the agent more, enter a negative amount. A negative bank adjustment transaction is posted to the agent account and the bank account. Bank adjustment allocations are not shown on invoices or statements. As mentioned before, the agent account is an umbrella account, so the amount is transferred to the corresponding agent revenue collection account via a bank adjustment allocation journal. Bank adjustment allocation transactions are written to the agent's agent account and the agent revenue collection account. Now, if the agent account was credited previously, a negative transaction is posted to the agent's agent account and a positive transaction posted to the agent's agent revenue collection account. If the agent account was debited previously, a positive transaction is posted to the agent's agent account and a negative transaction posted to the agent's agent revenue collection account. Gosh, there's been some tongue twisters in this presentation. Thanks for watching. Next up, the account manager.